afternoon, friends. Welcome to Konexio Technical Insights. I am Rahul Randeria, and I will be conducting today's show. Today, we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, and the different kind of setups into Nifty, Bank Nifty, and the different other classes. Let us revise what we have discussed last week. Last week, we have discussed that looking at the global setup, we might see, and last week was a truncated week. So initially, we might see as some sort of profit booking. We had an expectation that one should buy Nifty and then Nifty on dips after a correction of 1% or 1.5%. But it went further below. But from lower levels around 15,600. Nifty made a low of 15,580, and from there we have seen a rally towards the level of 15,900. So we had a view that buy and dip should be the strategy for the last week, and Nifty behaved similarly in that particular manner. Now looking at the daily setup, the formation is bullish on the weekly candle also, on the daily setup also. The trend is positive. But what we have seen in the last 1.5 months that Nifty has been moving into a congestion range, and whenever it is inching towards the level of 15,950, 15,960 odd levels, we have seen a selling pressure coming in. So we will see now. We will analyze on the chart, on the daily chart. You can clearly see it is visible that Nifty has been forming a triangular formation, and after a multiple attempts, again after four attempts, this is the fifth attempt when Nifty is again trying to test those levels, and will again see some sort of struggle towards the level of 15,915, 1515, and then 15,960. But looking at in the last 1.5 months, what we have seen, if you see candle by candle, you see that drops are small. I mean to say the drops which are coming in the on the intraday basis are the intensity is low, whereas the rise pullback are very sharp. I mean to say very sharp means either it is coming in intraday or it is coming in just 2 or 3 days. You can clearly see. So definitely, we have a similar view that Nifty will break the psychological mark, which is 16,000 sooner or later, maybe next week or in next month, first week of next month. Again, the strategy would be buy at this level, or even there is some sort of correction, 1%, a quarter correction, percent correction in Nifty. The strategy should be buy on dips. Initial target would be 15,960, which is the recent high. And if it breaks, then next barrier would be the 16,000 mark. And once it settles down or closes above 16,000, which is the psychological mark, then we have positional target of 16,500 to 16,600. And we strongly believe that this 16,500 and 16,600 target would be coming in next 2 or 3 months. So definitely the strategy would be buy on dips in Nifty. Now let us discuss the crucial support and resistance for the next week in Nifty and in the Nifty. The crucial support for in the Nifty are placed at 15,768. Below that, the next support is at 15,632, and the third support is at 15,578. These are the spot levels. On the upside, the first resistance is placed at 15,915, which was the multiple barriers, 4 times the strong barrier. If it breaks, then next resistance is at 16,082, and the third resistance would be 16,166. So these are the crucial support and resistance area where traders needs to watch out for the next week and trade accordingly. Strategy should be buy on dips. Even those traders who are buying in multiple lots, say 5 lots, 6 lots, can buy 50% Monday on opening, and then rest 50% should be bought on the correction around say 1% or 1.5%. One should take a swing call for a target of 16,000 above that for the next week. So now let us discuss the Bank Nifty. On the Bank Nifty daily charts, you can clearly see again it has been stuck into a consolidation range in the last 2 months. It has been moving in a very broad range. Currently, the setup is into the midway. The candle are positive. The momentum is also positive. RSI is also into comfort zone, inching upside. But definitely, again, the setup is indicating that definitely Bank Nifty has the potential to test the level of the major barrier, which is around 36,000, and above that, those levels. Once it breaks and sustains above 36,000, then it might rally towards the level of 37,000. But as of now, we are looking out for a target of 36,000 for the next week. But definitely, we are having a target of 37,000 in next maybe 6 to 8 weeks. So definitely, again, in Bank Nifty also, the strategy should be buy at current levels and on dips for an upside position target of 36,000 at least for the next week. So now let us discuss the important support in Bank Nifty, supports and resistance in Bank Nifty also. The important support in the Bank Nifty is placed at 34,357. The next support is at 34,000, and third support is at 33,559. Now the resistance on the upside in Nifty, the first resistance is placed at 35,347. If it breaks, then next resistance is at 35,751, and third resistance is at 36,036. So looking at the trends and setups in Nifty and Bank Nifty, the daily charts in Nifty and Bank Nifty, crucial supports and resistance in Nifty and Bank Nifty, the strategy should be buy at current levels and on dips for a position target of 16,000 and above 16,166 for Nifty. Position target I mean to say, and Bank Nifty for an upside target of 36,000 for next week. So one should be bullish. Any correction should also be used to buy on the lower level at the lower levels. Now let us come to the third section of the show, which is option analysis. In option analysis, we try to identify and we try to analyze where there is build-up of the rise in the open interest, where there is a strong concentration of building in position in calls and puts in Nifty and Bank Nifty. So now let us discuss the in Nifty. In Nifty, you will see on the charts there has been a rise in the open interest in the Nifty out of the money calls were seen at 15,900 out of the money calls. There has been rise in open interest. There has been a rise in price also. Next is 16,000, which is the psychological mark. There is also a rise in the open interest. The rise in the price. Third, 16,100 out of the money calls. Again, rise in the price, rise in the open interest, which clearly indicates. Again, the strong point which I think is you can clearly see the IB. The implied volatility is, I think it is nearest to the low of the recent past. So which clearly gives us an indication that this time we might see Nifty breaking the level of 16,000 mark and going beyond those levels for the next week. So definitely at current levels and any correction should be used as a buying opportunity in Nifty. Again, in Nifty calls also one can take a swing call in Nifty calls out of the money calls also. So the trader should look out for 15,900 calls, 16,000 calls, and 16,100 calls at least for swing tradings for the next week. In the Nifty puts, you can clearly see the rise in the open interest was seen in the out of the money puts where 15,900 15,800 puts, then 15,700 puts, you can clearly see, and 15,600 puts. Whereas you can see there has been a rise in the open interest. The price have seen some sort of negativity. I mean to say percentage change, there has been a fall in a premium, which indicates that the downside could be kept in the Nifty. Maybe 15,600 could act as a strong support for Nifty for next week. Definitely, again, you can clearly see that there has been the IVs are somewhat higher compared to the Nifty out of the money calls, which clearly indicates what I feel looking at this data that in next week we might see the writing of the put in the Nifty options, maybe 15,800. Uh, the moment Nifty starts rising, there might see or we might see the writing of 15,800 put, then 15,700 put, then 15,600 put. So the looking at the derivative data, the rising open interest, the IVs, which clearly is indicating, and looking at the technical setup that this time Nifty is poised to break the 16,000 mark. So traders should clearly watch out for these levels and trade accordingly. Buy and dip should be the strategy. Again, even the high risk traders can buy at that level. Those are deep pockets traders. Definitely the strategy, the momentum is bullish, and one should buy at current levels and on dips also. Now let us discuss the Bank Nifty calls and puts. Uh, you will see in Bank Nifty calls, we have seen there has been a rise in open interest in Bank Nifty out of the money calls were seen at the strike price of 35,300. You can clearly see on the screen. Then 35,700 and 36,000 calls. So here you can clearly see that there has been a rise in open interest. There has been a rise in the premium prices. There are premium prices rises. The drops are very slow. I need to say very low, and you can clearly see this is clearly indicating that the IVs are, I mean to say, in the comfort zone. Though they are slightly higher, but in Bank Nifty, you can take a call for buying in out of the money calls from the current level. So if there is a correction, multiple traders can buy these out of the money calls for at least for the next week. So now let us discuss Bank Nifty puts. In Bank Nifty puts, the rise in the open interest has been seen, where in 34,800 out of money puts, then 34,500 out of the money puts, and 34,000 puts. So here you can clearly see that uh, there has been a rise in the open interest, and the most important thing which I would like to highlight is again it is similar to the bank in the Nifty puts. Here we have seen that the percentage change in the premium is clearly indicating that in the recent in the last couple of days there has been writing seen in the Bank of Nifty out of the money puts. So which clearly indicates that at least for the next week, 34,000 could act as a very strong support for the Bank Nifty. And again, you can see the IVs. The IVs in Bank Nifty are comparatively higher than Bank Nifty calls. I mean to say, the IVs in Bank Nifty puts are comparatively higher than Bank Nifty calls. There are chances that we might see writing in Bank Nifty puts out of the money puts. So which is clearly indicating that we might see Bank Nifty rallying towards the level of 36,000 in next week. So now let us come to the last segment of the show, which is a positional call. I have identified one stock from auto sector, and the stock is Tata Motors. You will clearly see on the daily charts. It has on the daily chart. It has formed a triple top formation from almost April till current date. You have seen in the mid of February and March, it has made a first top. Then in mid of May, it has made a second top, and in the first week of July or end of the May, it has made a third top. After that, the stock has been drifting lower. RSI is also near its lower support zone, or we might call it into oversold territory. But the setup is indicating that the stock has witnessed distribution in the last 2.5 months. Again, the next negative trigger for which is on the fundamental side is there has been a shortage of semiconductor, and it will be there will be a shortage of semiconductor for next 6 to 8 months, which again can put pressure on the stock for next couple of quarters. So definitely the setup is weak. The current market price of the stock is at 295. Any pullback from this level, maybe towards the level of 310 or 315, should be used to sell at the higher levels, or those who have invested in the stock or are gaining profits can try to book profits at the higher levels, maybe around 310, 315. The crucial support in the stock is at 280. Once it closes below those levels, then the stock will have a potential to test the level of 200 in next 6 to 8 months. So the call is for next 6 to 8 months. Any trader or investor, those who have invested in the stock looking at this pattern, any pullback should be used to book profits, exit in the stock, avoid going long at these levels, or those who want to take a call, or that we will wait for the trend to break, then one should keep a very strict trailing stop loss of 280 on closes basis. Once the stock closes below 280, the investor or position trader should exit from the stock, and then we might see stock drifting or falling towards the level of 200 in next 6 to 8 months. So overall view is caution in the stock, exit on the rally, pullback rally, or book profit at the higher levels. Now let us conclude the show. Thank you very much for watching the show. Any suggestion you can give into the comment box. So have a nice trading week. Thank you very much.